Hi everybody, I'm Michael Reinking coming to you straight from the floor of the New York Stock Exchange with your weekly brief. As a reminder, this is for informational purposes only, and the NYSE does not recommend any investments or investment strategies. So the situation in Ukraine has been escalating for a few weeks and came to a head overnight as Russia invaded the country. Coming into today, the S&P closed at a new low for the year, down about 11%. The NYSE FANG Plus Index was down about 19%. We saw a swift reaction within financial markets overnight, with S&P futures trading off 3%, and the full risk-off playbook was enacted with the US dollar index, gold, and treasury markets all catching a bid. We also saw commodity markets where there could potentially be supply issues move sharply higher. That pertains to energy markets, metals markets, and agriculture, as we saw ICE Brent move up about 8% to 106, and both corn and wheat futures were limit up about 5%. So as I talk to traders on the floor, there's still quite a few questions that remain to be answered. How long will this military operation carry out? How draconian will the sanctions ultimately be? And will we see supply disruptions within commodity markets, which will ultimately impact economic activity? Now, this afternoon, we're expecting to hear from President Biden just after noon, and we will get some answers in and around some of the sanctions. In terms of the market reaction, we did close at a key technical level yesterday, and we broke that at the open. We didn't see the climactic sell-off that some were hoping for. We actually have seen, as markets have had some time to prepare for this, we're seeing some of the hedging activity, start to be unwound. I'd highlight that gold prices have come about $50 off of the highs, and equities have now cut the initial losses about in half. Historically, if you look back at geopolitical situations, these only have a short-term impact. However, one of the key ingredients that has been there in the past is the Federal Reserve, and they are not in a position to actually help soften the blow this time around, as this will only add to the current inflationary issues. I'd expect this does take a 50 basis point rate increase off of the table, but I'd fully be looking for a 25 basis point rate increase in March. Next week, Chair Powell will be addressing Congress, and so we will get a little bit of an update on that front. Well, thank you for joining me. I'm Michael Reinking, and this has been your Weekly Brief.